Yeah, so this is a question I get generally from 90% of our clients that start up. And what I always advise is having a second account, having a strictly savings account. And every time you get some money in, 25% of it I would put aside for corporate tax and HST. It's a good rough number. You might not need all of it based on the fact that you will get HST credits. So that, that 13% could be down to 10%, 8%, depending on your expenses. And your corporate rate really doesn't change, but 10% of your gross is not going to be your tax rate. So, if we account, or sort of, 12% of the gross, we've allocated 13% of the gross to HST and 12% of the gross to corporate. But again, after expenses, those numbers will come down, and that'll give you a good buffer in your account. To be quite honest, taking an accounting course would help, but beyond that, hiring a good accountant like BBS Accounting that provides unlimited support will get you there, because we plead with clients when we first engage to ask questions. Ask. The more you ask, the more you learn, and that's what our job is. The more we educate you, our actual job becomes easier over time, because you know how it all works, you know what to do, you know what we need, and then we absolutely can, streamline your processes and make you tax efficient. So what I also like to tell clients and advise them is their setup. So in their corporation, what they truly need to do is find out what expenses are truly business related and move those over into the business's name. For example, cell phones. You could get a corporate cell phone account versus a personal cell phone account and pay for that 100% in the business. The business is its own entity, therefore that cost that belongs to the business now doesn't belong to you as a person. Obviously, there are some personal use minutes probably on that cell phone, and that could be allocated at year end in terms of personal versus a business. But treating the business as its own entity separate from yourself and having its own expenses and not involved with you is going to save you money, because that will lower your taxable income.